Bloomberg Audio Studios. Podcasts, radio, news. This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. The Bloomberg Businessweek Daily podcast with Carol Massar and Tim Stenivek on Bloomberg Radio.
Who cares about the first quarter? What we all wanted to know was how things are looking in the current quarter, what the outlook is. For more, we bring in Bloomberg News Chief Wall Street correspondent Sri Natarajan. He joins us here in the Bloomberg Businessweek studio. Sri, a couple words came up: uncertainty, unknowns, turbulence. What's the outlook?
The funny thing is look, that's something that Jamie Dimon tends to use a lot. But yes, across JPMorgan, Morgan Stanley, Wells Fargo, that word certainly got repeated a lot more than we're used to seeing. And it's very understandable because of everything that's happened in the last week. It would have been an impossible situation to get to expect these bank bosses to get in there and tell you that they have a very clear grasp of what lies ahead, because the path ahead clearly there are many folks on the road. We don't know where this will go. For now, when you look at the numbers that they've printed, extremely good, extremely healthy. They should be happy with where they are. But when you look at what their stock is actually doing for the year, down more than 10% across the board, other than JPMorgan, and even JPMorgan is red for the year, it tells you that there is some nervousness in the system out there. Not so much about how banks will handle it, but because banks are considered a good proxy for the broader economy, any concerns about the pace of growth, whether that's recession or even slower growth, which is what Ted Pick said, the consensus seems to be slower growth, not no growth. That's still not going to be a good outcome for the banks at the end of the day. And that's why some trepidation in their comments today.
Yeah, and we saw definitely some swings in the share price today as well in all of them. Hey, Allison, come on in here. What's kind of the key takeaway here?
So I think JPMorgan volatility helps their trading, and they've used that to sort of set aside some money for the growing risks. I think, what's important is if you look at the underlying quarter for JPMorgan, obviously, I thought it was very robust, and they had sort of $500 million in upside to trading. They also had a gain related to First Republic of about $600 million, and so they used that to set aside $1 billion in loss reserves. And that compare that to Wells Fargo, where they had a slight release. But then if you look at the underlying numbers, JPMorgan now, a weighted average view, 5.8% unemployment rate, and that's about similar to Wells Fargo is. So in a way, Wells Fargo had sort of stayed a little bit more conservative. They have a different loan mix. JPMorgan has more card. I think that's for sure an area that I'm a little bit more worried about, just given the growth we've had. It has higher loss rates. So, and by the way, like 40% of JPMorgan's reserve was for card. So JPMorgan, I would say, the model benefiting from volatility helps them to provide for some of the risk from that uncertainty. And Wells Fargo, just a little bit softer, right? So as I said, there not much happening with the reserve, but net interest income was a little weak, demand a little weak, and I think that's why the shares are a little weaker.
So, Allison, given what we heard from these three banks, and we still have some to hear from next week, how would you characterize their view on the economy as it is right now, trade, tariffs, and potentially any red flags?
I think, the view on the economy is, I think, similar to the rest of us. We have to see what happens with tariffs and a lot of the uncertainty, and there's a lot of unknowns, and hopefully we'll know more by the time next time earnings rolls around.
So clear as mud. Right,
exactly. Clear as mud, but factoring in, so like what JPMorgan said is like, look, our base case is still very benign, but we're going to factor in more of a risk of a downside scenario.
All right, so listen, I got to just say, we were all kind of looking forward to the start of earnings season so that we could talk about something else than tariffs. And obviously tariffs play into, the outlook and what these guys have to say. But, Sri, we just talked with you and kind of how we were looking forward to what we got from these guys. So is there something as we look in this environment where uncertainty is the watchword that we got from them in terms of, yeah, folks, you should be worried because these are the guys that matter. They see the financial system.
Look, it's an interesting question because for the longest time we've looked at these bank earnings results not necessarily to see how good their bonuses will be at the end of the year, right? That's what matters to them, but for us it's a bellwether for what comes ahead in the broader economy. And maybe this is something Alison could address, because one thing I've been thinking about, not an original thought, has come up a few times, but I do feel it plays a bigger role increasingly. Are these big banks necessarily a true bellwether when you consider that they have stopped playing a role sort of in the riskiest spots of the lending market, whether it's the mortgage market or the consumer debt market? Can you really look at their results and see if we're seeing a turn in the economy, or do we need to look elsewhere?
What do you think?
I think it depends on the business that you're looking at. So I do think that from a card perspective, right? So JPMorgan, biggest card lender, obviously focuses on the higher segment than some other card lenders. Bank of America, when we hear from them next week, we really do look at their consumer trends as an underlying bellwether. The thing is, right, is that nothing has happened yet. If anything, what we saw, and JPMorgan alluded to this, is that we've seen a little bit more front loading of the spending, right? So people that maybe want to make a sizable purchase, or some things they wanted to sort of get in front of any uncertainty. We've also heard this from our retail analysts. We saw it in some of the Fiserv data.
Right.
Spending holding up. People were surprised, right? But those numbers are through March. They're through March 31st. And so a lot of the uncertainty is happening now. And if you look at all the deals that are stalled, as we've had a lot of IPOs reported to be on hold. And, looking more towards that side of the business, I think the most telling numbers are Goldman Sachs, Morgan Stanley, cutting investment bankers now. They do normally do that process at the end of the year. They're doing it early. We saw the similar thing a couple years ago. Morgan Stanley did also allude to things like AI and technology, but, they also performance-based. So I think you look at those numbers and you look at some of those cuts, it's sort of telling on what they think is going to be happening with the banking fee pipeline.
I feel like we're not crazily worried, just real quickly.
Well, but to Alison's point, I think the divergence is there, right?
Okay.
If any pain in the consumer economy, it'll probably still take a few quarters to play out. But where you're seeing an immediate effect is because of the lack of confidence and because of the uncertainty, it is going to impact portions of the market that banks that are tethered to the investment bank and the investment banking business are going to see that effect, which is why I'm very curious how Goldman reacts not only through earnings, but also a few weeks beyond. Because even in the last 10 days, you've seen a little bit of weakness in that stock relative to its bigger peers. I want to see if that lasts or not, or if earnings completely changes the narrative on that.
And maybe just one thing throw out quickly, $1 billion in loss reserves at JPMorgan. They built $15 billion in the pandemic in a couple of quarters. So there is uncertainty, but just keep in mind, and people look at the market and different measures, but I would just point to that for the bank.
That's why we talk to you guys. It's the perspective we needed. Thank you both so much. Bloomberg News Chief Wall Street Correspondent Sri Natarajan and Bloomberg Intelligence Senior Analyst for Global Investment Banks and Asset Managers, Alison Williams.
You're listening to the Bloomberg Businessweek podcast. Catch us live weekday afternoons from 2 to 5 Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app, or watch us live on YouTube.
Well, farmers are worried that Trump's trade war with China could cause disastrous consequences for their ability to sell soybeans. Even before the current administration took the reins, farmer income had been under pressure for a couple of years as the cost of seeds, fertilizer, and equipment went up and crop prices declined. That's what's going on here in the U.S. with this trade war.
Exactly.
We want to go outside of the U.S. and talk to somebody who's spent his career thinking about where products or commodities come from, who brings them to us, how they're compensated, and the working conditions of those individuals. Paul Rice is the founder of Fair Trade USA. It's the nonprofit Fair Trade Certifier. He started nearly 30 years ago. The organization says that a product is a fair trade certified, and that means that it was, quote, made according to rigorous standards that protect the livelihoods of farmers, fishers, and other producer communities and the environment. He's got a new book out. It's called Every Purchase Matters: How Fair Trade Farmers, Companies, and Consumers Are Changing the World. He joins us from Berkeley, California. Paul, great to have you. Congratulations on the new book. It's perfect to have somebody who understands trade and tariffs. You certainly understand these things. What is your view on tariffs, specifically with regard to the world where you've spent the last 30 years?
Well, tariffs are bad. There's no other way to put it. Tariffs are dumb. and they're going to hurt a lot of people. They're going to hurt American consumers, as we all know, because the cost of things that we buy are going to go up. And it's going to hurt American business because there's retaliatory tariffs. I recently spoke with a U.S. company that sells about 40% of their roasted coffee into Canada. Retaliatory tariffs are going to make it harder for him to do that. And finally, the tariffs are bad for sustainability.
Oh, interesting.
The onus is going to be pushed back onto a lot of developing world farmers and factory owners to absorb some of that extra cost. And it's going to pressure a lot of people to cut back on sustainability measures that, things like installing solar panels or, providing better housing for workers. So all the way around, tariffs are bad.
One of the reasons we wanted to speak to you is because the products that we see the fair trade certification on are often products that you can only get outside of the United States. And I think it's fair to say the reason the president wants to impose these tariffs are because he has, in his view, the U.S. has been treated unfairly when it comes to trade. He wants to see manufacturing specifically and production specifically move back to this country. Is there a disconnect in your view, given that some of the stuff that could see tariffs on it, you can't actually produce here in the U.S.? Like, help me make sense of that.
Yeah, a huge disconnect. I mean, 70% of Americans drink coffee. The U.S. can't grow coffee, right? Coffee comes from Latin America and Asia and Africa. And, similarly, 80% of Americans eat bananas. Guess what? We don't grow bananas in the U.S. We import them. So tariffs are going to hurt Americans because all of those things that we love to drink and eat, like coffee and bananas, the price of those are going to go up. But furthermore, tariffs are really going to hurt those farmers around the world. And so, what is quite possible is that a lot of those businesses are going to fail because they cannot absorb the tariff, which means more workers out of work. I mean, imagine what happens if unemployment goes up in Mexico, what kind of pressure that puts on the southern border. There's nothing good about this whole tariff policy.
No, when I think about, Paul, supermarkets, certainly here in the United States, they live on such slim margins. So they have no choice but to pass any additional costs off to consumers, correct?
Either they'll pass it on to the consumer or they'll push it back onto the producer. And that's what I mean by, companies in Mexico, for example, going belly up or having to lay off workers. If Whole Foods or Costco or Walmart decides to push some of that extra cost back onto the producer, then we're going to see some severe business disruption south of the border, which is not going to help our national situation at all. And on the similarly, even if it all gets passed on to consumers, with prices already high, will consumers pay more for imported strawberries or tomatoes or coffee or bananas? I don't know. I think it's quite possible the demand goes down, which means a ripple effect around the world that it's going to be a tremendous hardship for a lot of people.
Well, that brings us to your book. And as we said, it's entitled Every Purchase Matters, How Fair Trade Farmers, Companies, and Consumers Are Changing the World. Fair trade, I think it's thrown around. I think we like to buy fair trade goods, but explain to the world, just remind them what fair trade is all about.
And you're talking, when you ask the question, Carol, you're asking about fair trade, like capital F, capital T, fair trade, not the concept of fair trade.
No,
which is
exactly.
subjective.
Which is something the president might use. But no, what fair trade?
Fair trade certified. Right?
There it is. Trader Joe's coffee. You're holding up.
So what gets that certification? What has to happen in order to get it?
Yeah. So fair trade is a rigorous 200-point checklist of social, labor, and environmental criteria that farms and factories meet and get audited against every year in order to wear the fair trade certified label. And on this side of the market, our 2,000 plus market partners from Whole Foods to Target to Walmart all agree to pay a small premium back to those farmers and workers, which they then can invest in healthcare and education and better housing. So fair trade, through the lens of global development, it's a market-based approach to global poverty and protecting the planet. For us, the consumer, increasingly consumers want to know that there's no child labor in our chocolate bar,
right,
and that the environment wasn't destroyed in the production of our coffee. So fair trade is a way that we as consumers can feel reassured that the products we're consuming are produced in a responsible and sustainable way.
What are the checks that are in place to make sure these sustainable practices are followed when the folks from your organization are not watching, when they're not there visiting these plants?
So our 1 million plus farms and factories are audited every year. The auditors talk with the workers. They visit the production sites. They do a rigorous inspection, and that happens every year. And in addition, of course, all of the brand partners, or many of the brand partners, are visiting those farms and factories every year. So it's an incredibly rigorous oversight. And the producers, for their own part, tend to be producers that are really bought into the notion of greater responsibility, and they're getting this premium. So producers don't want to run the risk of losing the annual premium they get. So there's a real alignment of incentives where the producer, the farmer, or the factory owner get more money, the brands get a more secure and reliable supply chain, and the consumer gets a product that makes us feel good because it's helping lift workers out of poverty, it's ensuring fair wages, and it's helping to protect the environment.
I didn't know Driscoll's had kind of gone through a little bit of a path. Driscoll's, I think about strawberries, right? Like
every berry.
Every berry is Driscoll's. There's the organic, there's the non-organic. We are Bloomberg, and we think, Tim and I think a lot about profitability. Obviously, right here we are in earnings season, but at the same time, the ability to be a good company, be a good corporate citizen, do well. What is kind of the financial story of sustainability or fair trade practices?
Yeah, I love this question, because I spent 11 years working with coffee farmers in the mountains of Nicaragua in my 20s, and then moved back here to start fair trade. And I've always felt that fair trade would never work for the farmers if it didn't also work for business. So I've spent, the better part of the last 30 years working directly with companies to develop a strong business case for sourcing in a more sustainable way. Not just because it's the right thing to do, but because it creates value for the firm, right? What Michael Porter at Harvard calls shared value, right? So there's value for the farmer, for the worker, for the planet, but also there's supply chain resilience for the company, there's brand differentiation for the company, and there's that emotional gratification as a consumer that we feel when we buy something knowing that it did no harm. I'll give you a recent example. Walmart piloted fair trade tomatoes and saw their sales go up by 3% when the label went on the package. Now, who would have thought that a Walmart consumer would care about tomato farm workers in the developing world? And in fact, they do. And so it's just an indication of the business case for fair trade, right? That consumers are moving in this direction. They're voting with their dollars, if you will, for the kind of world they want to see. They're looking for more socially and environmentally responsible products. And quite frankly, this macro trend is politics proof. I just wrote a piece for Wall Street Journal, an op-ed piece entitled, "Will Sustainability Survive Trump's Second Term?" And the reality is the business community is moving in this direction, not just because it's the right thing to do, but because it's better business and it is better for business.
Paul, is there anything that cannot be produced, in your view, in a fair trade way right now?
Can an iPhone? I don't even know if that makes sense.
We would love to work with Apple on fair trade iPhones. We're not there yet. But over the last 26 years, we started with coffee, and then year after year, we engaged with lighthouse brands, pioneering brands who wanted to take us into their industry. So now we work in apparel, we work in cosmetics, we work in in furniture with Williams-Sonoma Inc. And we're certifying seafood, we're certifying dairy. We certify farms and factories in the U.S. now, not just abroad. And so, our vision is fair trade for all. And it's the notion that any and all supply chains, domestic or international, can embrace responsible sourcing practices. And so, stay tuned. Maybe next year you'll bring me on when we have fair trade iPhones.
All right. We will do
We'll
that.
hold you to
We will
it.
do that. We will hold you to it. Paul, thank you so much. Paul Rice, glad we could finally get to you. Founder of Fair Trade USA. His book, Every Purchase Matters, How Fair Trade Farmers, Companies, and Consumers Are Changing the World.
This is the Bloomberg Businessweek podcast. Listen live each weekday starting at 2 p.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Chinese exports of rare earth minerals are all put on hold as producers grapple with tighter permit requirements following last week's new restrictions on the critical materials in an escalating trade war with the U.S. We want to go deep on rare earths to understand how they fit into the trade war, if there are alternatives, how much leverage it gives China, and more. And we've got a great roundtable.
So we're going to just tell you, sit down, pull your car over, maybe grab a drink. Well, not if you're in the car.
Get your shovel and dig in.
Well, because this is going to be,
It's a little mining reference.
You're going to learn some stuff.
Gracelyn Bascarin is director of the Critical Minerals Security Program at the Center for Strategic and International Studies. And a name familiar to our audience, Bloomberg News metals and mining reporter Joe Doe. Gracelyn joins us from New York. Joe is here in our Bloomberg Interactive Brokers studio. Joe, rare earths. On the surface, sounds like they're rare. But I'm learning that they're not actually that rare.
Right. They're not rare.
They come from the earth, though.
They come from the earth.
That part is true.
It's hard to find them in density, right? So the rare earths are like literally in your backyard. If you just like dug up some dirt, you could be like, oh, there are rare earths in this. But
so we live in New York.
Right. But it's the same as like, oh, well, I take zinc as, a vitamin or whatever, whatever it might be, right? But in terms of industrial scale, right? Because you need rare earths to create things like permanent magnets, and permanent magnets allow for wind turbines to keep moving and for electric motors to keep moving. That's really all like the main thing regular people should know. To find the density is quite difficult. It's not like they're just in your backyard.
Mm-hmm. Like a huge pile. Gracelyn, come on in. Your background's pretty incredible. A mining economist, critical minerals and trade. You began your career in South Africa's Platinum Belt, spent 5 years at the World Bank in South Africa. So tell us a little bit about, what don't we really know about rare earth minerals? And then we want to kind of roll into this, how the U.S.-China trade war plays into all of this. But come on in and welcome.
Thanks so much for having me. So, as Joe said, rare earths aren't rare. They're everywhere. But why we're really vulnerable for them is that once you dig them out of the ground, you have to separate them. And those separation facilities are primarily in China. So for heavy rare earths, they actually separate over 90% of the world's heavy rare earths and about 80% of light rare earths. Now, the problem is that means once they go to China, China can apply any sort of export restriction to them. And they actually started doing this about 15 years ago when China first cut off Japan from rare earth exports because they got into an argument about a fishing trawler. So we have seen minerals and even rare earths at the very beginning be weaponized over time. For us, it's a national security challenge because rare earths go into almost every form of defense technology, from fighter jets and warships to missiles and tanks.
Gracelyn, can we build the facilities here in the U.S. that could process those rare earths so then the United States gains control over some of the share?
Absolutely. And we are building them. The problem is that none of these facilities come online overnight. So over the last 5 years, the Department of Defense, through something called the Defense Production Act, has given out over $300 million to build these facilities in Texas and Canada. And for some rare earths, it'll be the first major facility outside of China.
Canada, that maybe 5 years ago that worked. We're not going to talk about that right now, but that made my ears perk up because of what's going on between the U.S. and Canada right now.
But can we produce enough, and Joe, come on back in here, enough in terms of to meet the demand that we need here in the U.S. for things?
Not right now.
Yeah.
No. This is, what Gracelyn's getting at here is very similar to the story of steel and copper and like all these other things, anything manufacturing, right? Like this is the approach of the Trump administration is bring all manufacturing back to the United States of America. To maybe take a phrase from our president, sounds great, doesn't work, right? Like you can do it, but as Gracelyn says, it's going to take you a while. MP Materials is like the big critical minerals company in the United States.
Yeah.
And they're still shipping a significant amount of their rare earth pulled out of the ground to China to be processed. Yes, they're currently working on integrating everything and having their own processing, but you talk to anybody in the market and they're like, that even when they get fully scaled up to what they say they want to do, it's just not enough on their own.
Graceland, so it sounds like China has a great weapon in this trade war to get the U.S. to maybe bend a little bit. Is that fair?
Absolutely. So let's talk about the export restrictions that just came out this week. So they're not actually a ban. If you think about restrictions, you start with something that we call non-automatic licensing, which means you have to apply to get a permit to be able to export the minerals. Then you have tariffs, you have quotas, those are your mid-tier, and then you have a ban. What China did this week was the lightest form of restriction, for lack of a better word, is they put in the non-automatic licensing. But if the trade war continues to accelerate, they can continue to tighten those restrictions. And ultimately, because there are so few facilities that can give us the rare earths that we need outside of China, that's going to undermine our national security. It's in things like semiconductors, so it's going to affect our economic security, and it's going to affect our energy security, given that they are in many forms of energy technologies.
So is your read on what China did by taking the easiest measure or the least punitive measure a strong diplomatic sign to the U.S. that we're open to negotiating?
I think it's a sign to both China and the U.S. Like, ultimately, these companies are all Chinese, and cutting off exports altogether would be economically consequential to them. So it's a sign there that, look, that there is room, that, like, we need to get ready. We need to buffer, be ready for potential changes. But it is also a sign to the U.S. that they didn't go all the way to the very end and ban exports immediately.
Joe, how long, in your view, do you think the U.S. will have to rely on China for processing?
Forever?
A long time. I mean,
we're talking one hand counting, or
not anywhere in the near term. And to jump off what Graceland just said, they didn't put an export ban or an export control on everything. Like, the two most common rare earths are untouched by this, right? Mm-hmm. So the way I've heard this described from Graceland and from other people in the rare earth space, right, the critical mineral space, is like, Chinese policymakers are incredibly sharp. They know the score. They know what impacts what. And when this came out, this export control came out on Friday morning, initially people in the market were saying, oh, whoa, okay, they're going to restrict these, 7 or so rare earth critical minerals. But then what they started realizing was, oh my gosh, this includes like actual magnets. This also includes actual products that are shipped to the United States. And that's when, especially in the defense community, people were calling up and saying, whoa, hold on, this is an interesting shot across the bow. Because you might remember, gallium and germanium had export controls put on back in the fall. And that was like a follow-up to prior year where China had said they were looking at it.
Right.
I mean, we had reporting a year ago that said when the gallium germanium shot came from China, that was the panic button that went off across the DOE, the DOD, and all the other departments. So we had one very high senior White House official who told us that was the moment when everybody finally got it and understood how serious this was.
And that was under the Biden administration?
Biden administration. So this isn't new, right? Like, China,
yeah, it isn't.
My point of, they know the score, which is they'll roll out something here, they'll roll out something there, and it's a warning sign, right? It's like, hey, we're doing this, and we're making the people that matter most realize it first.
Graceland, contextualize this for us, because in the negotiations between the U.S. and China, which do not exist right now, but will ostensibly have to exist when it comes to resolving this trade war, that's the whole idea here. How important is the card of rare earths?
Rare earths will be important. Minerals will be important. If we take a step back, and what Joe has said is how this has escalated even from the previous administration of germanium, gallium, antimony was banned in the fall. We saw tungsten came at the start of this year. Is that we are actually vulnerable. We kind of sometimes throw all minerals into rare earths or rare earths into minerals. But when I go beyond rare earths, we're getting increasing restrictions coming out. And all of these commodities that we're being hit by are ones that we often don't have alternate supply of, but we may have limited stockpiles of, and that we need for our fundamental security. So expect to see minerals, I think, feature very strongly in the conversation, including rare earths, because of the fact that we are dependent on China for close to 24 critical minerals.
All right. So final thoughts here. Just got about a minute and a half here left. So Joe, I don't know. I guess to watch the negotiations between U.S. and China, right? And what they say specifically in this area. This is a really, really important sign in terms of what's happening.
Yeah, we've all focused on tariffs for the past week.
Right.
And for the past 2 or 3 days, we've really focused on the China tariffs because everything else apparently is on pause, 125% or whatever the latest number is.
Right.
And what we've seen from China in this context of rare earths, of what they've done, is they have different tools to respond to punitive tariffs from the President of the United States. Because on some level, when you're just saying 125% tariff on all imports coming from your country, it's like the market's like, well, what does that actually mean?
Right.
And China's response, they come back in very specific ways. And this is one of them,
Very
which is
targeted.
like very targeted. Right. So like, great, you hit us with a big tariff. Guess what? We're going to do this one very specifically here. And maybe initially nobody in the market notices it, but people like Graceland and others are like, whoa, hey, let's take a look at this.
All right. So it sounds like the advice is let's watch and see how this plays out, this one in particular. Hey, guys, I wish we had more time. This was so smart, so good. Graceland Bhaskaran, Director, Critical Minerals Security Program at the Center for Strategic and International Studies. Thank you so much. And of course, Joe Doe, always appreciate any time we get with you as well. Metals and mining, heavy machinery reporter here at Bloomberg News.
This is the Bloomberg Businessweek Daily podcast. Available on Apple, Spotify, and anywhere else you get your podcasts. Listen live weekday afternoons from 2 to 5 p.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.